Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be doing a Bitcoin miner update. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Look Into Bitcoin site, and we actually have a lot of metrics that are divided into subsections of on-chain metrics you can use. So for example, we have down here the mining chart, and there's a lot of really useful data we can see here, especially considering the recent price action we've had in Bitcoin. I think it's about time we actually look into the current mindset of miners securing the Bitcoin network. So to begin with, if we just look at the Bitcoin hash rate, now this is taking into account the current computational power being used to secure the Bitcoin network. Now, of course, securing the Bitcoin network isn't the only incentive of miners. They get a monetary reward for doing so in the form of both transaction fees for all usage on the Bitcoin network, as well as block rewards for doing so. So about every 10 minutes, a new block is mined on the Bitcoin blockchain containing a number of transactions that are all paying a transaction fee, and as a reward for doing so, they'll receive a number of Bitcoin. So if we see the Bitcoin hash rate has been on a very steady uptrend for the past few years, and this is just because of a growing interest in Bitcoin and cryptocurrencies in general, especially as we get more larger players and potentially even institutions joining in the action. But we can see we've had a very choppy last few months in the Bitcoin hash rate, especially given Bitcoin's very negative price action. So we've had a bit of sideways consolidation in this hash rate, and especially following the FTX collapse, we had a stark decrease in the hash rate, potentially indicating that a lot of miners were turning off their machines, capitulating as they simply couldn't afford to continue operating with Bitcoin's price being so low. Within the Bitcoin mining industry, the margins can be very thin, especially considering all of the resources required to actually run the hardware to actually mine the Bitcoin. So once we see the Bitcoin price collapse, where a lot of miners are relying on the mined Bitcoin they actually earn, selling that immediately to actually run their operations, once the Bitcoin price decreases too much, they just simply can't afford to do so. So having seen a positive reaction in Bitcoin price, we're actually seeing this correlation where the hash rate is increasing too. We actually saw the hash rate increase a little bit before the Bitcoin price rise. Now, this may have to do with the fact that in about a year's time, we're going to have the Bitcoin halving event. So the block rewards I mentioned previously, that is the inflationary rate of Bitcoin and the reward that miners get for mining each block on the network. Whereas every 4 years, this block reward or the inflationary rate actually cuts in half. So in just over a year's time, the miners will actually only receive half of the block reward for securing the Bitcoin network. So there is the potential argument that miners are trying to maybe front run this halving event by securing and acquiring as much Bitcoin as they possibly can now, while the reward rate will be twice what it is next year. And if we then look at the Bitcoin miner difficulty, we can see there's an almost one-to-one correlation between the hash rate and the mining difficulty. We've actually just recently done an explainer video discussing the miner difficulty, how it is calculated and changed. So I definitely recommend checking that out if you haven't already. But quickly, just to prevent too much Bitcoin being supplied to the network by miners, increasing their hash rate, increasing the computational power, every 2 weeks or so, the Bitcoin mining difficulty increases or decreases. So we have this very steady rate of blocks coming in at about every 10 minutes to try and keep the network inflation at a very steady and predictable rate. So the Bitcoin mining difficulty increasing goes one-to-one with the hash rate increasing. It basically just indicates that miners are getting a little bit more confident in the longevity and the potential for future profits in securing the Bitcoin network. Now, this really can be shown in the Bitcoin hash ribbons. So the hash ribbons are taking the hash rate, which we saw previously, and averaging that out over a 30-day period, which is this blue line we see, and a 60-day period, which is this purple line we see. And what we can actually see is the hash rate as it's on a general trend to the upside. If we take these averages and actually overlay them on a price chart as we do here, we can actually see when they cross, they give these Bitcoin hash ribbons buy and sell indicators. And the way this works is as the 30-day moving average is a bit more reactive to the changes in hash rate as the 60-day, once it crosses beneath the 60-day, this gives us a sell signal, which is this red or pinkish region we see on price here, as this gives early indications that a lot of miners are potentially switching off their machines, potentially due to forecasting negative price reaction in Bitcoin in the coming weeks and months. So usually this miner capitulation leads to a at least consolidatory period in the Bitcoin price. However, once we see the 30-day moving average cross back above the 60-day moving average in the hash ribbons indicator, this is what's known as a hash ribbons buy signal. And we see the background color on this chart turning from a pink or a red to this white color. This is a hash ribbons buy signal, which historically is one of the most accurate and profitable signals we have for trading and investing in Bitcoin. Going back a number of years, we can see in all but one example of the Bitcoin hash ribbons giving us a buy signal, we've seen an immediate positive reaction in price. There's actually only one example where this hash ribbon's buy signal didn't give us at least some profitable period following, and that was the most recent one we had here. But this may have been due to some fundamental factors given the FTX collapse and some other macroeconomic factors that are having a large influence on the Bitcoin price. However, we have just seen a new hash ribbon's buy signal here, and we can see almost immediately we have had a positive reaction in price. So it'll be interesting to see in the next few weeks and months if this actually follows through and we get some more sustained positive price action. And the last metric we'll look at today is the Puell Multiple. Now this is looking at the daily issuance of Bitcoin denominated in US dollars of today's value compared to a 365-day or a yearly average of the miner earnings. So if we factor in the block rewards that are coming in about every 10 minutes to miners that are securing the Bitcoin network, if we convert that Bitcoin amount into US dollars, we can see the miner earnings for securing the Bitcoin network. And we can see when there's a large discrepancy between their current earnings and their yearly historical average earnings, when this is very much weighted to suggest that miner earnings are down substantially from what they historically were probably expecting to earn, this gives us a Puell multiple buy signal down in this green zone here. So if we to just look at these values down here, so for example, a Puell multiple of 0.5 indicates that the current daily miner earnings are half of what they were historically over the previous year. So it's no surprise really that we see a lot of miners to begin capitulating, turning off their machines and halting operations when we see Bitcoin prices this low. And once we actually see this start climbing back up again, it can give a good indication that a positive reaction in price and a lot of miners re-entering the space is actually a very positive sign for Bitcoin. And what we can actually do is see that there's been a very clear long-term downtrend in the Puell multiple. So every time we've had a Bitcoin bounce in price and maybe some more miners trying to re-enter the market, we've still seen this downward resistance giving us this very downwards price action trend. But very recently we've actually broken above this trend and out of this green buy zone, and very recently we've had a very positive reaction in price as well. So it's one of these, is it correlation or causation? It's impossible to really say if price is the leading indicator or if the miner revenue is the leading indicator, but either way we can see that they do have a very much positive correlation, and once we see this Puell multiple start increasing to the upside, it's a very good indication for the potential long-term profitability of Bitcoin. So just to summarize, following a period of Bitcoin miner capitulation, it's now becoming apparent that Bitcoin miners are growing increasingly confident on the future probability of profitability for Bitcoin mining. Historically, acting on hash ribbon buy signals has provided outsized returns for strategic investors, and especially ones that coincide with a Puell multiple trend change. We can also say, as Bitcoin is only a little over a year from its next halving event, it's very much a strong possibility that miners are trying to accumulate as much as possible now before the actual inflationary rate of new Bitcoin entering the network is cut in half. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. Don't forget to leave your comments in the comment section down below and on social media what your thoughts are on the current state of the Bitcoin market and how you think Bitcoin miners currently feel about the current price action. Thank you very much for watching, and I'll see you in the next one.